Hello and Assalamualaikum to everyone. Today we want to talk about case 1 about the revenue cycle. Our group member is Azizul Hakim, Syami Shakina, Atria Natasha and myself, Muhammad Haziq. The process involved in the revenue cycle. For the first one, receive customer order. Receive order from customer. It either comes from an individual person and companies. Second, authorized by obtaining credit approval. First, orders from companies are sent. It will be sent to credit departments, checking on credit limits. For the third one, shipping goods. Merchandise is shipping from the warehouse. Goods are well packed, and the sales information are on the packing slip. For the fourth one is billing. Invoice are sent to the customer, and the last one is payment by customer. Collection of cash sale. Customer check and remittance advice are received from bank in the mail. Bank reconciliation are done. There are five uh, process in the revenue cycle. Okay, next one. Source document involved in this cycle. Documents that are involved in these cycles are customer sales order, customer statement, bill of lading, monthly statement, credit memorandum, shipping document, sales invoice, sales journal, credit approval form, open order report, cash receipt journal, right of authorization, and the last one is account receivable subsidiary ledger. Okay, next one, journal entries and accounts involved in this cycle. For the general entries in billing department, debit account receivable, credit sales. For the inventory control, debit cost of goods sold, credit inventory. For the cash receipts, debit cash, credit account receivable. For the sales return, debit inventory control, and sales return and allowance, credit cost of goods sold, and account receivable. So the account involved in the sales transaction are trade account receivable, sales, bad debt expense, and allowance for uncollectible accounts. For the cash receipt transaction, the accounts involved are cash, trade account receivable, and cash discount. For the sales return and allowance transaction, the account involved are sales return, trade account receivable, and stock allowance. Okay, next slide. Flow chart for the revenue cycle. As you can see, this is a revenue cycle. For the first one is order from customer, next processing order, next billing and invoice preparation, delivery of good and service, delivery received by customer, recording transaction, and the last one is payment received. Okay, in the order entry department, we get customers order from mail or fax. Go to the input, go to the data validation program, shipping program, and then approved by shipping ticket, ship good, approve shipping ticket. Okay, input, go to the IT department, which is billing program, sales invoice, and then go to account receivable update, account receivable reporting, and then go to weekly, and the last one is customer statement. Go to the group or corporate customer. Okay, in the cash receipt department, from bank to remittance advice, and then reconciled by cash receipt clerks, and then the IT department, from bank remittance advice, account receivable, remittance advice transaction, go to cash remittance update, and then go to remittance transaction, which is B.
Okay, I'll be explaining about internal control involved in revenue cycle. There are a few like control environment, entity risk assessment, control activities, informative system and communication, and monitoring of controls. I'll be explaining it one by one. The first one, which is control environment, where the organization have integrity and ethical value. The individual also is accountable for their own internal control responsibilities. And it also will understand generally overall entity basis. The second one, which is entities risk assessment. Auditor must understand how management consider risk related to their revenue process, estimate their significance, and assess likelihood of their occurrence. The risks also included their competition, rapid growth, and new technology. The third one, which is control activities. Reliance strategy is adopted in these control activities. Auditor also need to understand control that exists to achieve management's objective. The fourth one, which is information system and communication. The auditor needs to understand, process the accounting record, supporting documents, and account that involve to process sales, cash receipt, and sales returns. The flow of each type of the transaction and the process used to prepare estimate for their accounts. by walkthrough if accounting audit. The monitoring of controls in revenue cycle. Auditor must understand the entity's monitoring control and how the management assess design and operation of the controls, the supervisory personnel within the system, and review personnel who perform controls in the revenue cycle.
Assalamualaikum and hi everyone. So my name is Shami and I'll be presenting about risk area. So risk area have two kinds of risk, which is control risk and inherent risk. So the first risk, which is control risk. In control risk, auditor need to understand and document the internal control based on the reliance strategy. So in order to do that, auditor must understand first the 5 components of internal control that my friend have explained just now. Second point is auditor must plan and perform tests of control. When auditor do this, auditor can systematically examine entities' revenue process to identify relevant controls that help to prevent, detect, and correct material misstatement. The third point is auditor need to set and document the control risk. Auditor must set achieve level of control risk after the test of controls have been completed. And if the test of controls support the planned level of control risk, auditor can conduct the planned level of substantive procedure for related account balances. But if the test of controls does not support the planned level of control risk, auditor must set control risk at level higher than planned and also need to do additional substantive procedure. So moving on to the second type of risk, which is inherent risk. Auditor must also consider inherent risk factor because this kind of factor may affect revenue, cash receipt transaction, and also financial statement account. So the first factor is industry-related factor. For example, level of competition within industry. The competition within the industry may affect entities' pricing policies, credit terms, and product warranties. Second point is complexity and contentiousness of revenue recognition issue. In some entity, recognition of revenue involves a very complex calculation. For example, recognition of revenue on long-term construction contract and also long-term service contract. This revenue recognition may have impact on cut-off and also accuracy assertion. Moving on to the third point, which is difficulty of auditing transactions and account balances. Account that difficult to audit will lead to inherent risk problem and also such as management's estimate for allowance for uncollectible account and sales return. Risk of material misstatement is a function of factors, and this evidence is not reliable as payment by customer. And the last point is misstatement detected in prior audit. Presence of misstatement in previous audit is a good indicator that misstatement likely to exist in current audit. In continuing engagement, auditor already have results of the company prior year's audit, so it can help the auditor to assess the potential misstatement in revenue process because they can refer it to the prior audit. So that's all from me. Next, I'll pass the presentation to my friend.
Assalamualaikum warahmatullahi wabarakatuh. My name is Azizul Hakim bin Muhammad Noor, tip number 197859. Okay, today I want to present a session and predict procedures. Okay, for the first session is occurrence. For the possible misstatement is revenue recorded but goods not shipped or service not performed. For the control activity, accounting for numerical sequence of sales invoice, and for the test of control, review and test entities procedures, that is for accounting numerical sequence of sales invoice, and the state of analytical procedures and test of detail. Okay, for the next session is completeness. For the completeness, possible misstatement is goods shipped or service performed, but revenue not recorded. For the control activity, accounting for numerical sequences, that is shipping documents and sales invoices, and test of control is review and test entities procedures, that is for accounting numerical sequence of sale invoices. For the next session is authorization. For the possible misstatement is good shipped or service performed for a customer who is a bad credit risk, and control activity is proper entity procedures for authorizing credit and shipment of goods, and test of control is review entities procedures for granting credit. And for the next session is accuracy. Accuracy, the possible misstatement is revenue transaction recorded an incorrect monetary amount. For the control activity, authorized price list and specified terms of trade. And for the test of control, compare prices and term on sales invoice to authorized price list and term of trade. And for the test of detail, compare prices and terms on sample of sales invoice with authorized price list and terms of trade. And for the next session is cut off. For the cut off, possible misstatement is revenue transaction recorded in wrong period. Okay, control activity, daily billing of goods shipped. Need to consider the daily billing of goods shipped, and test on control is compare dates of sales invoices with dates they were recorded in sales journal. Okay, this is for analytical procedure and test of detail. And the last but not least session is classification. The possible statement is revenue transaction not properly classified. The activity is chart of accounts and review sales journal and general ledger. That is from me. Okay, thank you.
Case 1, revenue cycle. So revenue case, you can read it on your own. The question asks about explain the reason of the audit test you should perform to check the completeness and the accuracy. So the answer will be inquire about and observe the procedure used when booking, and cash the sales account to the nominal ledger, and agree to the total of sales figure. Review the result of audit procedure on receivables, inquire about and observe the procedure used when booking, and cash the list of invoice used in a month. So the second question, which is list and describe the audit work you should perform of the statement in the financial position. The answer will be reperform depreciation calculation for a sample of individual vehicles from the non-current asset. Cast the column for cost, depreciation, and net book value. Agree a sample of vehicles currently owned to the non-current, and review the repairs and maintenance expense account, and agree to any unusually large amount to invoice to check that not purchase of a capital nature have been misclassified.